welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Vinny Motiwala. And for the next 1 hour, viewers, we'll be taking all your stock-related queries into the show. So do get ready. But before that, let's have a look at what the markets are up to. So Vinny, despite a muted set of global cues coming in, Indian markets continue to show resilience after taking a breather, trading near the day's highest point.
Absolutely, and look at the Nifty trading at 18,334, up almost 1/10% and trade day's highest point, almost near those levels as well. Sensex too comfortable trading about the 62,000 mark as well. Mid-cap, small-cap space. Let's pull up the charts for Nifty mid-cap first. That is trading better than, and you know, the mid-cap, small-cap is outperforming the benchmark indices. So look at the mid-cap space, it's up almost 0.5% in trade, while the small-cap space is furthermore, better performance there is around 0.8% gains coming in there. Let's move on and talk about some of the individual gainers and losers in trade. And Adani Enterprises, IndusInd Bank, Adani Ports, NTPC are among the top gainers which have been coming in trade. Sector-wise also, Shrishti, when we're looking at it, what is coming in is that Nifty Pharma and Nifty Infra. These are the ones that are a bit of a facing of pressure is on the positive side, but other than negative side, I beg your pardon. Nifty Pharma down 1% in trade, while Nifty Infra is down almost 0.5% in trade. PSU banks today, a different story coming in there, side bit of a positive sign there. Nifty PSU is trading with gains of 0.9% in trade. But among the losers, and you know, obviously Nifty Pharma is under pressure, Shrishti, but Dr Reddy's came out with its numbers as well, and that stock is among the top losers coming in as well, Shrishti. How were the numbers like? What is happening here?
So actually, we need the numbers when we talk about for Dr. Reddy's, they were not bad. They were in line, almost in line to the street expectation. But if we look at the internals, that was on the weaker side, as well as the management commentary didn't give any confidence to the investors, and that's why you are seeing a cut out there. If we talk about the numbers this time around, so just quickly, if I can tell you, then the revenue has seen a decline of 7% sequentially. The margins have seen a blip of around 5% on a sequential basis. But if we look at the G Revlimid contribution, that is seen to be declining on a sequential basis, which the analysts definitely don't find good. Other than that, the US generic business has seen a decline of 18% sequentially. So that indicates the pressure in the US markets persist. And when we had a word with the management, they also indicated that the pricing pressure is still there, and they expect that to continue going ahead with respect to the competition. Coming to the India business, this time around the revenues has seen an increase when it comes to the brand divestments in the India. That has given a contribution of 264 crores, and despite that there has been an increase into the R&D spend at 8.5% or percentage of the revenue in Q4. So the US business didn't perform well. When it comes to the India business, there has been a one-off on the back of brand divestments. The outlook is not that positive when it comes to the management commentary, and look at the downgrades coming in. 5 brokerages have downgraded the rating of this particular counter post the results when it comes to Kotak Securities, Prabhudas Lilladher, PNB Paribas, Systematic, as well as IIFL. And even the consensus target price has been slashed from 5,031 rupees to 4,907 rupees right now. So these are the factors that are playing in for Dr. Reddy's, and as we can see, Nifty 50 top loser today and no respite after the opening at a lower take. But with this, let's also listen to the management of Dr. Reddy's, what they had to say onto the growth outlook for their India business. We had a word with Reddys Israeli, who is the CEO at Dr. Reddy's. So let's hear out from him.
Likely that these products will continue to be meaningful for us. May fluctuate from quarter to quarter as it's related to the type of orders that people are placing. What leads the growth in India for us is the focus on meaningful brands. We have certain therapeutic areas, certain brands that we are focusing on, going for all tier cities in India. And in addition to that, we are very busy with launches of new products and with licensing in and BD activities that will bring more products to India. So we see India as a very important market for us, a leading market for us, and we are planning to grow double digit, not just in next 12 months, but also in the next coming years.
Okay, that was the management of Dr. Reddy's, and obviously you'll have figured by now that this is a buy now, sell now lens topic for today. Dr. Reddy's, the numbers that have come in from this pharma major clearly indicating that there is a pressure in US and maybe that could remain volatile. Let's bring on board our experts for today to continue this discussion forward. We have Sneha Poddar joining in with us and Kunal Bothra joining in with us as well. A very good morning to both of you all. And Sneha, I'm going to come to you. Now, obviously, when Dr. Reddy's reports his numbers, when you're checking the US numbers, seems like, it is indicating a bit of a volatility that could continue in the US markets. Is that, in terms of just the pharma space, how should we be looking at that? And also for Dr. Reddy's, how are you viewing this company as well? Fundamentally, what are you seeing and what would you look at in the pharma space then?
Okay. Good morning. If we talk about the pharma space, though there has been some sort of improvement that we have seen over past 2 to 3 quarters, but then still the clear-cut indication hasn't come out for us to turn actually bullish on the pharma space. Though there are still certain concerns with regards to price erosion, with regards to US FDA approvals, and though the product launches pace has improved, but still it is not that convincing enough to change our ratings from say neutral or sell to buy. So there are concerns in case of pharma companies. Now if we talk about Dr. Reddy, Dr. Reddy numbers, like as you have mentioned, it was actually below estimates, and it was largely because of though the sales numbers were pretty in line, but then because of higher OPEX, the numbers were a disappointment in terms of margins and profitability. And if we look at certain pockets, like the CIS market, there the slowdown continues. Then the price erosion continues in case of the export market. And so going ahead, given the high base of FY23, are we expecting a very, very moderate kind of growth in over next 2 years? Moreover, though the product launches is expected to continue with its momentum in FY24, but then somehow the visibility from those new product launches is very limited. So we continue to be cautious on Dr. Reddy, and we believe whatever little positive is there, it is already factored in the valuation. So even valuations are not very comfortable. So we would continue to remain neutral on this stock.
To remain neutral at the stock, and all the factors that are at play is what just Sneha highlighted for you all. But Kunal, just before the results, we have seen Dr. Reddy's hitting its 52-week high for a couple of days. So now after the sharp fall of 6.5%, are the charts distorted, and what will be the advice for all the retail investors that still hold Dr. Reddy's in their portfolio?
Good morning. My belief is that most of the pharma stocks have actually gone into a turnaround mode. So I think the pharma sector itself is getting into a big revival phase. Dr. Reddy could be interesting because from the last 6 or 8 months of lows for Dr. Reddy, the stock has shown decisive change of trend for itself. So I think the previous low for Dr. Reddy 6 months back or 8 months back was around the 3,750, 800 mark. And from there on, the stock has been going into this rising channel pattern. Now it could probably come back towards the lower end of the channel pattern. It may not be a surprise because Dr. Reddy has this odd tendency of coming back towards the lower end of the trend line. We've seen that happening for the last 6-8 months for the stock price. 5, 6, 7 attempts for the stock in this kind of a time span. So maybe one more attempt for the stock price. But I think what I like is that most of the pharma stocks are getting into a breakout mode, and that could probably shield the major part of correction for Dr. Reddy. So it could be a good buy and dips candidate. Maybe if the stock comes closer to 4,300, 350 mark, which is the lower end of this trend line, that could be a good zone to go contra for Dr. Reddy.
Okay, that's the view coming in from our experts on Dr. Reddy's. But on that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with the stock-related queries after this break. Welcome back, and you're watching Buy Now, Sell Now on ET. Now, let's get started with all your stock-related queries. You can send us your queries either on the WhatsApp number that is flashing on your screen or even on our Twitter page. Let me start with the first query, Kunal. This one is coming in from Dhananjay. This one is for you, and this one is our technical view is what they want on PNB Bank, for a period of 1 to 2 months, they're currently holding 800 shares at 49 rupees per share.
Well, I would suggest to hold on to the stock. So if you are in from a slightly longer term time frame, then I think it's a good zone where most of the PSU banking stocks are coming back into, because these stocks have confirmed a very strong breakout in 2022 second half. Yes, they've gone through a 5 month, 6 months consolidation, but then the recovery, or in fact the rally which had happened in the correction, which has happened is very smaller magnitude. So the correction was of a very smaller magnitude as compared to the price rally. That means that it's more of a time-wise correction rather than a change of trend for many of these PSU banking names. I would be bullish on these stocks. If you can hold it for, say, the next one year to 2 years as an approximate time frame, I believe the stock could rally up significantly higher from current levels. So hold is what I would suggest.
Okay, moving on to the next query, and this one is coming from Ansar, and this query is Sneha is on Prince Pipe. He wants to know, is this a good level to enter Prince Pipe, and how do you see that stock going ahead? What's the outlook?
Sure. Though we don't have any coverage, but yeah, what I believe is that the outlook for Prince Pipe is pretty promising, as the demand from the agri side has started reviving, while from the housing side the demand remains robust. So definitely the levels, it has consolidated for a long time, so the levels are pretty good to make the right entry into the stock. And definitely one can hold from a long term perspective to generate good returns.
Okay, Sneha, I'm going to come to you. This is a long-term query coming in from Divya from Bangalore, and this one is on Hindustan Aeronautics. They have 30 shares at 2,500 rupees. They want to know, should they look to add this today, or maybe wait for the numbers and then look to add? This is for a mid to long term.
See, Hindustan Aeronautics is definitely a very good company, and if it's from a long-term perspective, one can probably make a small entry into it, and then gradually keep on adding in a staggered fashion. Though, one should remember that the stock has really run up sharply in the recent times. So it might it might consolidate for some time and then make a start its up move once again. So but still for long term investment, timing is a little difficult. So what I would suggest is that one can at least make a small entry and then gradually keep on adding it, because the outlook is very positive for the company, given the kind of orders they have been receiving. So for next few years, the profitability should be really robust for the company.
Okay, moving on to the next query. And Kunal, what's your outlook on Jubilant FoodWorks? The question is from Bhardwaj. He is currently holding 120 shares at the price of 515 rupees. Wants to know the outlook. Can he add more at the current market price with an investment horizon for the next 3 to 5 years?
Well, absolutely, yes. I think the worst seems to be behind for Jubilant Food. I'm bullish on QSR space and few of the stocks which I've been time and again highlighting on the show as well. I think at 470, 475 and the recent low for Jubilant Food, which was around the 410, 415 mark, the worst seems to be behind. The stock has formed bullish patterns on the monthly time frame, candlestick patterns on the monthly time frame in the month of March and April, and post that we've seen a steady recovery. It's a long way to go for Jubilant Food to try and even come back closer to the life high levels, and that's why I believe that the risk reward is attractive for a buy, specifically because you have a time frame of 3 years and higher.
Right. Kunal, going to come back to you. Ramamurthy from Bahrain. Firstly, he's thanking you for your feedback and advice on Anantraj and NCC. Moving on to the query for today that he has, he wants your advice on whether they should look to book partial profits in something like an ICICI Bank and State Bank of India, where they're making somewhere around a 20% profit, and maybe look to buy something on the bulk side like a Suprajit Engineering.
So, buying Suprajit Engineering by itself could be a good strategy because the stock has given a breakout confirmation on the daily charts. Maybe at 397 is where the stock is trading. So, you can start off maybe at 385, 380. That's a zone where you can look to start buying. But then selling ICICI Bank and SBI, absolutely not. That would be my advice, because these stocks have just started to get into a zone of a breakout. We've not yet seen the best of the leadership so far for either the private sector banks, and specifically the likes of SBI and ICICI Bank. The kind of breakouts which I am sensing on the charts for indicators for ICICI Bank as well as SBI is extremely bullish on a medium to long term time frame. So even though you are sitting in profits of 20% approximately, I believe, for example, ICICI Bank, I'm expecting 1,050 as an immediate target. So there could be a scale up of another 10% at least in the next 3 to 6 months for many of these private sector as well as the large cap PSU banking names. I would suggest a hold. Superjit, as I said, you can buy it as a separate mid cap trade, but then closer to 380, 385 levels.
Okay, that's the advice. Moving on to the next question. And Sneha, this question is from Gargi. And since we were discussing about the pharma names, her question is on two counters, Aurobindo Pharma as well as Gland Pharma. What's the outlook for on both of these counters with a medium-term investment horizon?
See, in case of Aurobindo Pharma, we continue to be neutral as I mean, like though the company has a lot of niche products, but then the the visibility is actually not very clear, and the earnings growth that we're kind of projecting for next 2 years, it's moderate, and it would be roughly around 10-12%. So there's not many adequate factors for us to turn bullish so far. See, actually, in overall pharma space, at least in first half, we expecting kind of a muted growth. Probably from second half, some kind of revival can be seen in the pharma names. So, Aurobindo Pharma, we are actually neutral, and even in case of Gland Pharma, the earnings is likely to be a low single digit kind of number. So we would suggest to actually avoid Gland Pharma. Aurobindo Pharma still he can continue to hold from a long term perspective, but Gland I would suggest to avoid.
Okay, Kunal, the next query is coming in from Parvinder Singh. This one is on LNT. What is the best level to add LNT at for the next 6 to 8 months? Is it right now or should they wait for some time?
So I think wait for some time. The recent last 4-5 months of charts from end of 2022 and start of 2023 indicates that 2150, 2100 is a major support zone. Now, on the back of this selling post results, I would sense that the stock should at least come back towards 2100, 2150 mark, say in the next 3 to 4 weeks. So I believe a better price to buy the stock would be at least 100, 150 points lower from current levels. But there could also be a tendency that maybe the stock can even break that 2100 mark for a certain amount of time, because the weakness which has happened for the stock, the gap down the stock had shown today, is an indicative of some sudden weakness which has creeped in. I would believe that makes sense to buy the stock at much lower levels than the current market price.
Okay, moving on, and Kunal, once again coming to you. The question is from Mr. Singh, and he wants to know the technical level to enter Phenotex Chemicals.
Phenotex Chemicals is, I think if I'm not wrong, the stock is trading at 258 rupees. Good level to buy the stock would be at 265 plus. That would be on a closing basis because that will confirm the stock breaking past above a series of previous resistances. FCL is the code for the stock on the NSE if I'm not wrong, and 265 is the breakout point. Would suggest a buy about 265 levels.
Okay, Sneha, this next query is coming in from Pradeep from Kolkata, and he's a relatively new investor. Now, they have a vision, long-term vision is what they're looking at, and a long-term view. They purchased Zen Technology, 100 shares at 202 rupees and 100 shares of Hindcon Chemicals at 61 rupees. What should they be doing with both these stocks? Look to book profits or wait for some time?
Extremely sorry, I have no view on both these companies.
Kunal, any view from your side on this one? Zen Technology?
Again, I don't track the stock, but then just looking at the charts preliminary, I don't sense that it's a good zone to buy the stock after 2 days or 3 days of gap up. The stock had shown earlier 280, 85 could be a better zone to buy the stock. And looking at the weakness in the indicators, there is a high probability that the stock may actually come back towards 280 mark before it resumes the uptrend. So the last 4-5 months of uptrend was quite good, but the recent gap up indicates that some sort of exhaustion has happened for the stock. 280, if it happens to come back or correct to those levels, that's a better zone to buy.
Okay, Kunal, once again coming to you. The question is from Balan, and he wants an advice on two counters. Firstly, he has Tata Communications from a price of 1240 rupees, and the other one is United Spirits from a price of 805. What he's saying that both of these stocks are quite stagnant right now. So should he continue to hold on or rather shift to banking or some of the IT names?
Well, I think you can continue to hold on as of now. My belief is both these stocks, Tata Communication, as well as United Spirits, are nearing their respective breakouts for themselves. So I would suggest a hold.
Okay, viewers, on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more after this break. Welcome back, and you're watching Buy Now Sell Now on ET Now. Let's move on to the next query. And Kunal, this one is on Nippon Life from Poonam. 200 shares of Nippon Life is what she's holding at 289 rupees. Can they look to average?
See, I would just suggest to hold on to the stock. I would not suggest an average out, because my belief is that Nippon Life, HDFC, AMC, these AMC stocks are struggling, and there is no major signs of strong revival which is coming into play. So I'm not sure that whether you should allocate more money over here to the stock. One of the other stock which I would recommend as a replacement or maybe as an addendum, if you're looking to add or deploy extra capital, could be on Glenmark Pharma. Stock is trading at 570 approximately. Looks extremely attractive for at least a 15 to 20% upside from current levels.
Okay, and let's just talk about LNT. Viewers, we'll be continuing with the queries, but LNT reported its numbers. Some of you have asked those doubts on that, and we did solve about buying the stock as well, or whether you should look to hold. But weak numbers in Q4 was on the cards. LNT stocks is spiraling downwards, and as the investors remain concerned about the margin pressure, my colleague Avan Dubash caught up with the CFO and Whole-Time Director R Shankar Raman to discuss their numbers and what is the way forward for the company. How will that be going forward as well? Because clearly Q4 was a bit under pressure. As of now also you can see that the stock is down 4.8% in trade as well. Let's go across and listen in to this interesting chat that Avan did have on the numbers with the CFO of the company.
In conversation then with Mr. R Shankar Raman, the CFO and Whole-Time Director at LNT. Thank you so much for joining in. Now, I think the margin disappointment is clearly what the street is reading into. In the previous calls, you have been very confident about margins recovering quite substantially due to internal efficiencies and a number of other factors. Why then have you guided for lower margins this time around?
If you recall the last quarterly conversation that we had around the results of the third quarter, I did mention about 50 basis points pressure that we are experiencing in the margins of our major EPC business. Let me explain to you that how this problem is a transitionary problem and has to be viewed in perspective. The order book, much of it that is getting executed in FY23 has been based on commitments that we had picked up the year ahead, that is in FY22. And normally the projects being 24-36 months duration, the purchase commitments are also made that much earlier. So the consumption of materials that had gone into FY23 is largely arising out of commitments made in FY22 and a little beyond for long lead items. And you know that the inflationary pressures were intense in FY22 and first half of FY23. The commodity prices have corrected their courses in the second half of FY23, and they continue to remain within moderate levels currently. So as we execute the old orders and the order backlog, it is but inevitable that the cost that we had committed on those projects gets to be consumed. The fact is that much of these projects have some element of flexibility to converse with the customers about the time overruns, because COVID did cause a lot of time overrun. So time extensions was required. And also the fact that very unusual spike in the material prices, supply chain getting disoriented because of the war in Europe, etc. These are unusual situations. So I think the clients also understand and appreciate. So our focus has been in FY23 to complete our commitments as much as we have scheduled to, so that the conversations around what compensations to be made to the contractor can happen at the back end of the contract. So my own sense is that we should be able to recover some portion of this margin decline over the future period. But the way the accounting standards are and our accounting policies are, the cost have to be absorbed as they are incurred, and the relief would come in the subsequent period. And nature of the projects being what they are, all of the relief will not get added up in one quarter where you will see a spike. In fact, you will see slow drip of the credits over future quarters. And I might hasten to add here, because the market's expectation is also to be, realistic, that the subsequent 2 quarters also I expect the margins to be soft, because that is where the peak of the execution of the past contracts are happening. It's only in 24-25 that you will see the benefit of the current contracts that we have won that will start playing out in the P&L charts. So as a company, we are bracing ourselves for first half of next year, the current year, as well, to be a little tougher on the margin front. But then I think things will ease going forward. We are confident overall that the jobs that we are executing will turn out to be profitable. How far they are to the estimated profit is something that we need to see as we go forward.
Okay, so that's the clarity. So since you've said that the second half of FY24 to 25, you will see your margins recover, can you just walk us through the best case scenario in terms of what you're working with by way of a number?
See, we had guided before all of this happened that our margins would be around 9.5%. Okay, and we are running at about 8.6% today. So the effort would be over 2 steps or 2 years to get back to those levels. The construct of the EPC contract does not permit margins to be 12, 13, 14% that the manufacturing businesses have. And neither does the construct have margins to be around 20%, which the services business have. In our revenue mix, you would have possibly noticed that a third of our revenues in the group level comes from services, which has a richer margin by comparison. About 10% or so comes from manufacturing, which has the mid-teen margins. And 2/3 of our business is from construction projects, EPC business, which has, as I mentioned to you, the margin level around this 9% band. So on a blended basis, I think we should be able to recover as we ramp up our services business and hopefully the manufacturing business on the back of the push that the government is giving for manufacturing sector. Hopefully, if those move up, then the ratios become a little more balanced, and that should enable the overall recovery of the margins. But in a given year, given the wide diversity of businesses that we have, we would have pockets where margins are modest and pockets where margins are healthy. So the blend is something that we'll have to manage as we have been doing all this while. And going forward, we expect to do that as well.
Point taken. Now, it's certainly been a flourish when it comes to the order inflow this time around, and the prospects for your order inflows down the line as well seem to be fairly strong. Owing to the tailwinds from the infrastructure sector, what is it that you're working with in terms of what will be your order inflow drivers down the line, and what are you targeting?
See, I think the biggest upside that we have is the congruence of where our skill sets are and where the country seems to be investing. I think infrastructure is the place where a lot of investments are happening, both at the central level, at the state level. And that's our strong point in any case. So I think we have an environment where the investments and what we can deliver are actually meeting quite nicely. What is going to be the key driver for us to be relevant in this context is going to be obviously cost competitiveness. End of the day, I think most of the projects are determined based on the L1 prices. So there is a bid, there is a tender, and we'll have to submit our prices. And the person who puts in the most competitive prices walks away with the project. So I think cost competitiveness is going to be key to enable us to be cost competitive, because price is not something we are controlling, the clients are controlling. And competition will make sure that the prices stay competitive. What is within our control is the cost levers and productivity levers. What we are doing as a company, and we are investing in these issues, and that is also partly reflected in the margins getting softer, is investment on automation, investment on technology, investment on better methods of constructing and executing projects. Now, all of this would mean that the engineering quality and excellence that we need to bring in terms of technology has to go a notch up. And as you know, nothing is free. Technology investment also means some costs to be allocated for that, which we are doing. We do think that given the opportunity spectrum that we have for the country over the next 3-5 years, and given the fact that our capacity is well geared towards these opportunities, the focus of the company would be on cost management and cash management.
Cost management and cash management. So then do you think that we can see that 10 to 12% guidance for FY24 in terms of order inflow? And will we see a higher inflow coming in from the overseas market for FY24?
We are almost at about 38% of our inflows coming in from international markets, even as we closed FY23. I do think that the ratio of about 1/3, 2/3 will continue to play out going forward in FY24 as well. The guidance that we are given is 10 to 12% increase over the 231,000 crores of orders that we have won last year. And if you recall, last year we had given a similar guidance, but we've been able to, fortunately, win more orders than what we had anticipated and close the year with about 19% order inflow. I must draw your attention that the current year, towards the fag end of the year, we are going to head towards the country's union election, and there are a lot of state elections coming as well. So in a manner of speaking, the year ahead, the FY24, could be a year short of, maybe just a bit short of 12 months full calendar that we normally have in a year. So given that, the opportunities are quite encouraging, and we are quite hungry for doing more, we should be able to possibly meet this 10 to 12% guidance that we have given. And if there is a pickup in the pace of award, as it was the case in FY23, we were able to beat the guidance because the award to tender ratio became that much more promising. Almost 9 lakh crore worth of tenders were put out, and 4.5 lakh crore worth of tenders were actually awarded in FY22. Whereas in FY23, the year that we completed, it just doubled. We were able to get almost 9 lakh crore worth of orders put out, and hence that helped us order inflow grow. So it all depends on how the macro environment plays out and how the government is going to pursue the investment-led recovery that has worked so well for us so far. And hopefully with inflation moderating and interest rate holding ground, we should be able to see better times. So at the floor, we should be able to do this 10 to 12%.
Your cash generation is high. Where are you looking to invest?
Actually, the investment program that we have is pretty modest. The normal capital expenditure that we incur is about 3,000 crores a year. And those are on strategic equipments that are required for us to execute our projects. Those I think we would continue to do. The core businesses does not need any further investments for capacity. We are trying to ride the energy transition business, which means that we are trying to invest in a factory which manufactures electrolyzer, which is used for hydrogen generation. That would take in some investments. Likewise, we are trying to scale up our data center offerings as a part of normal IT offerings. The data center investments is also something that we will do. We are building up 30 megawatts worth of data center at the moment. These are some investments that are new as compared to what we have done in the past. But bulk of the cash that we will generate will be recycled within working capital. And also, I think there is an opportunity for us to share the surplus cash with the shareholders. And you would have noticed even this year, FY23, the dividend payout ratio is as high as 43%. Historically, we've been paying out 25-30%. So we've stepped that up as well. So I think we will also find ways of generating cash and rewarding the shareholders. I don't think we are going to change track on our asset-light strategy. So I don't see any investments that we will be making on hard physical infra assets. It'll be more EPC-led, services-led, and the cash flow would be for stakeholders.
Back to buy now, sell now, and as we are in the last leg of the show, let's try to accumulate as many queries as possible. And moving on with your queries, the next question is coming from Karthik and Kunal. He wants an advice on Reliance Power. He's still holding 25,000 of shares bought at a levels of 10 rupees 80 paisa. Wants to know the short-term outlook on this particular counter.
I don't see any reason why you should be holding the stock from a short-term as well as from a medium-term play. I would suggest an exit on Reliance Power.
Okay, let's move on then to the next query, and this one is coming in from Sudhir. Sneha, they have purchased 37 shares of Affle India and 37 shares of GMM Pfaudler. What is the outlook on this one? Should they continue to hold this? They have not mentioned the buy
First,
price.
okay. We don't have coverage on both the stocks, but definitely I feel the prospects are good for both the companies. Affle India has consolidated for a long time, and now I think it's a it's a good long-term bet. So one can definitely hold on to it if the person has a long-term vision of say 3 to 4 years. GMM Fodler may take time to perform because the it's actually a kind of a play on a chemical space because it provides the equipments to the chemical industry. So till the time the chemical industry doesn't revive, probably even GMM Fodler would continue to consolidate. But then from a long term perspective, it's definitely a good company to stay invested in.
The next query, Kunal, is from Padma, and she's holding shares of BPCL from a price of 410 rupees. What's the advice coming in? Hold or rather make a switch to names like SBI or Infosys?
I would recommend a hold on BPCL solely based on the charts. I would believe that the stock has confirmed a breakout on the weekly as well as on the monthly time scale about 350 levels. So keep that as a trailing stop loss and hold on to your investments over here.
Okay. Kunal, one more coming your way, and this one is on CG Consumers. Padma Siva Rao wants to know, is it a good time to buy this?
Well, yeah, I think the stock seems to have gotten to an extreme correction to 55, 57 is where it's trading right now. If you have a long-term time horizon, then I think makes sense to buy the stock or start to buy the stock in a staggered manner from current levels.
Okay, Sneha Harikrishnan wants to know the outlook on BLS International. Will that be a buy at current levels?
See, we don't have coverage on the stock, and from the valuation perspective, I won't be able to comment. But then, definitely, given the kind of boom that we're seeing in the travel industry, definitely the at least next 1 year prospects look pretty bright for the company. But then, since the stock has run up a lot, I'm really not sure how comfortable the valuation would be at the current levels.
Kunal, Venkata Rao from Visakhapatnam wants your view on KPIT as well as Lokesh Machines. Is it a good time to buy both these stocks?
Lokesh Machine, I don't track, so I'll skip that. KPIT Tech, yeah, I think you can start buying at current levels. 1 month back, the stock corrected from 950 to I think 870 or 875, where the stock made a fresh low. So a marginal correction at play. The stock has come back towards a support point and then bounced off from those levels. Good levels to buy KPIT or accumulate if you're a long-term investor.
Okay, Sneha, Sandeep wants an advice on Loris Labs. He's currently holding 50 shares from a price of 400 rupees. How do you see the outlook for this particular company for a long-term investment, as well as what should he do right now since he's at a loss?
Loris Labs is a very good company from a purely from a long-term perspective. One really needs to keep the patience and the kind of products that they have. It would take time, but then definitely the results would be seen over the long term. So one needs to keep patience and hold on to for at least 4 to 5 years. The earnings prospect are really good, especially in the CDMO side. So we are expecting kind of 30% kind of earnings growth over the next few years. So we like the company, but since the pharma space is currently undergoing a kind of you can say time correction, and there are some kind of concerns with regards to the raw material prices and everything, price erosion and all. So the stock might take some time to perform, but good bet for long term.
Kunal, Bandhan Bank, Rajesh is holding Bandhan Bank at 232 rupees. Should they continue to hold this or maybe look to switch to some other bank?
Well, if your construct of your banking portfolio includes already many of the other large cap names, private sector as well as PSU banking stocks, then you can take a bet on Bandhan Bank. The stock in the last 1 month has seen a good recovery from sub 200 levels to now 240 plus, indicative that maybe the worst could be behind for the stock price. So, just on the anticipation of that, I think you can continue to hold on. Again, as I said, depends on your overall construct of your portfolio, whether you have many of the other private sector banking names, whether already part of your portfolio or not.
Okay, let's move on, and it's time to kickstart the rapid fire session. And the first query that I have, Kunal, is coming from Kabir Bedi. He has 450 shares of Advanced Enzyme from a price of 266 rupees. Wants an outlook for the next 1 to 3 months.
I would suggest a hold, keep a target range closer to 290 to 95 for Advanced Enzymes.
Sneha, Arvind Reddy wants to know, can they enter Federal Bank or maybe we could expect still some downside here?
One can definitely enter Federal Bank. The stock might see a slight downside, say to 120, 115 levels, but then it's a good bet for long-term, medium to long-term perspective.
Okay, Kunal, what's the outlook on Divi's Lab? Nandakumar has 45 shares from a price of 3,876 rupees. The stock has been moving higher, but still he's at loss. What to do?
I would recommend a hold.
Sneha, Sailesh from Bangalore wants to know, JK Paper for the mid to long term, is it a good buy now?
Yes, JK Paper definitely. The results have been really good for the paper sector as a whole, and the outlook also remains buoyant. So one can definitely hold on to it, at least for medium-term perspective.
Okay, Kunal, Gopinath wants to know, can he buy Infosys shares at current market price?
Well, yeah, you can buy at current levels, but then as I said, I think a few days back, buy on dips or add on dips could be a better strategy starting from current levels.
Kunal, Saranya wants to know, Vedanta, she's holding that at 293. What are the chances of the prices going up?
Looks attractive. 278 is the breakout point for Vedanta. So till the time the stock is trading about those levels, we would be bullish.
Sneha, what's your outlook on Berger Paints? Mr. Sarkar has bought shares from a price of 750 rupees, currently at a loss, but he's a long-term investor. So how do you see the outlook for this?
I would suggest to avoid the paint space. If you want to really play the paint industry, then stick to Asian Paints, because there's a lot of competition which is coming up in this industry. So, one really needs to keep a tap on it and take a call.
Okay, and with that was the last query for today. Thank you so much, Kunal, as well as Sneha, for joining in with us on Buy Now Sell Now and giving our viewers your expert view. And viewers, thank you so much for tuning in to Buy Now Sell Now. As of now, it's a goodbye from Shrishti, myself, as well as the team who put the show together.